Hello and thank you for tuning in again to Grizzly Capital, where we will continue our price action analysis of Bitcoin. It's incredibly volatile right now, so we will dive right in and waste no time. In the 12 hours or so since we recorded the last video, the price has jumped up to about $48,500, currently dropping by degrees, but has risen by over $1,000 since our last recording. And at that time, we discussed what was the bull case for Bitcoin to rise farther, and that looked something like this. And that's what we discussed recently, and we discussed that in terms of a pattern called the Three Rising Valleys pattern that takes us all the way to $109,000. And if you're interested in the details of that and in the history of Bitcoin as well, other times we've seen that pattern play out, do check out the previous video that we uploaded very recently. However, in this video, we are going to talk about the opposite scenario and what this price action could look like. So without further ado, we will throw some of the other trend lines back on and continue our analysis from there. In this zoomed out perspective here on the daily chart, we can see the origin of this green line that has proven to be support for us very recently here in the current drop, and makes the base of the Andrews Pitchfork our current trend that we're in. As I mentioned previously, the Andrews Pitchfork is a zero lag drawing tool for measuring trend exhaustion. And as I mentioned also, in order to stay in this current bull run as a whole, we would have to keep the price action inside of this particular fork. If we fall out of this fork, we also fall below this trend line and down into this area. And that's what I want to discuss today. I do believe, though, in the short term, that price could rise as high as this point of resistance here, which would be the halfway point of this 109,000, approximately. I don't think it could get even that high, but as it does approach this upside target here, what we will see is a head and shoulders pattern forming, and that will look like this. And it takes us down to this target here that we've been talking about. That's the measured move. These $26,600 in this swing here would translate to somewhere in this area, which is already dangerously below $20,000. So if you've been hearing some of these price predictions on how we might get to the sub $20,000 range, this is one of the patterns that gets us there. It's not the only one. Although, for reference, we did mention that it's not even the first head and shoulders that we have seen. We saw another head and shoulders here at the last peak, and briefly I'll review that we fell out of this one, had this measured move down to this support line. And this time I think that what we're looking at is a head and shoulders on this support line that takes us down. So we're on top step, next rung down, and we'll continue rinse and repeat. Although I think that the drop actually does get somewhat more violent from anywhere below these two lines, anywhere below this cross here, this X, and outside of this fork, things get pretty nasty pretty fast. But let me remove this earlier head and shoulders from the chart so that we're not too cluttered. And I'm also going to remove the bull market case for the moment and just consider these downside targets. However, we'll put this Andrews Pitchfork back up on here just to show the current trend, because we are still in it and it is relevant. This current trend that we're in is actually a subset of a much larger trend that begins actually in the previous market cycle, and it's this one here that takes us from the peak of 2019. It starts actually at the very, very bottom of the the bear market in 2018, and the fork connects as its peak, its high-low swing, the high of 2019 and the COVID crash of March 2020. And this is the bull market as a whole that we have been in ever since the COVID crash. If not before, you could say that the bull market began here with a big crash. But in any case, a lot of people have been paying attention to all markets and crypto as a whole in particular since 2020. It's been quite an interesting ride, I think you will agree. And it's about to get even more interesting because I think we are going to finally come out of this price action. Stay tuned to the end of the video and you'll hear my long-range price prediction for exactly what happens after this and how long it lasts. So we'll get into that sort of stuff forthwith. There is an interesting thing I would like to note here about this previous head and shoulders, though, that we did see, and I did circle it before in the previous video, and I labeled that as what I call the structural top of the bull market. Even though this head over here is technically a higher price point and a lot of time has passed, a good half a year has passed between these two peaks, nevertheless, this previous peak in the spring, early summer, in May, I guess it was, really is the structural top. And I mean that as I circle it here, that it is in this particular range here. This is the median line, represents the zero, and these gradations here, these levels are all Fibonacci retracements. So this is the 1.0, this is the golden pocket of the 618, and the 382, and so forth. So this area here is near the, shall we say, top of the channel. And even if we get up to this $109,000 area, in this area up here, we are, where the crosshairs are, we're still not going to retest this area of the channel. And even at that price, we're only just barely getting to the median of this smaller pitchfork here. So if we could retrace and break through the median of this and through this particular trend line here, which I said earlier I don't think we can do, we're still not going to retest this region of the Andrews pitchfork. That's the trend as a whole. The trend is quite exhausted, as I've mentioned before in earlier videos, but I'm sure you're well aware of some of the volume analyses that have been going on as well. Volume has been dropping all year long, so it really is an exhausted trend, and that's what we're looking at. We can look at that exhaustion in a slightly different context if we examine that as a Fibonacci channel. And this is the current bull market that we've been in, beginning with the COVID crash. And again, what we see is that this structural peak is not going to be retested, even if price action brings us all the way up to this area. We're still not going to retest this region of this Fibonacci channel. We could look at that Fibonacci channel as an even longer range trend, by the way. If we look at it just the current bull run, this could look very discouraging and frightening to see price action fall all the way out of it. And that's reasonable to think and to feel, and it will come very much as a test. For context, we could zoom out a little bit and look at a larger Fibonacci channel that has as its base here also the COVID crash here in last March, but its peak, the price action peaks in this region back in 2017, If I zoom out of that briefly, I don't think I have a screen sized for that. Yeah, you'll see here the peak in the end of the 2017 bull run. However, I don't want to change my focus here, so if you come back to that, we will still be inside of this larger trend if price action falls outside of this smaller one. And if we go back to inception and look at a Fibonacci channel that is drawn that way, we get a channel that looks like that. So I won't belabor those details. Well, you know, it might be fun. Let's see what that looks like on the monthly. No, it doesn't really resolve too well, and I don't want to go too far into the weeds here at the moment. So this is what the current action looks like in terms of a Fibonacci channel if we take the current bull market as a whole. And as I say, I don't think we are going to break up to this upper end of this channel, even if price rises. So my general thesis is that the trend is exhausted. So let's look at that exhaustion one more time in a slightly different context and try to figure out where could price fall to if it does fall out of this pitchfork here. The next pitchfork down is this modified shift pitchfork here, and from here the price action we see we are on the median line testing this fork here, and yeah, in order for us to have a bull run continue, we would have to break out of it to the upside. That, as I have said before, is quite an ask. We are trending down this way, and as we make it down the levels of this, once we break through the median here, I think it's this is going to provide less and less support, less and less resistance to the downside. And so as we continue down, the next trend that we would be falling into as we fall out of that one is this trend, also having as its anchor point the previous high from this region here. And if we fall out of that trend, we would be inside of this trend, and price action on this pattern would bring us all the way to the bottom of it. There is also, by the way, I think I briefly mentioned, yet another pattern that brings us to the same area. And let's look at this as an 8-hour chart here in order to size it a little differently, see some of these details more clearly, left shoulder, head, right shoulder, and so forth. There is also a harmonic pattern, a butterfly pattern, that brings us down to a very similar target down here. And this is one of these XABCD patterns, beginning up here, where we see the price drops, as we all remember, XABCD. If we take this Fibonacci retracement here, the downside targets are going to be this 0.382, which we have hit, this 0.618, which I believe we would have hit if not for this line of support that is very structural and fundamental that we hit sooner. However, this pattern does still call for a final target down at the 1618 retracement, also inside of this other Andrews pitchfork on the way down. And maybe we could even resolve that one layer more and see where that gets us. Yeah, that's the same information. We'll zoom back out to the 8-hour and clear that out of the way. So this pattern brings us to a very similar place as this pattern. So what we do see is, in essence, a corroboration effect. So let's look at that in one more context, just to be as thorough as possible. We did mention some of these targets in the previous video as well on the upside. So let's look at some of these targets on the downside as we work our way out of this head and shoulders pattern or out of this butterfly pattern. The difference between them is that in the butterfly pattern, we just continue dropping, and in the head and shoulders pattern, we rise a little higher, which we've been doing in the last 12 hours, as I mentioned, all the way up as high as we can get, and then fall over. That's really the only difference between the two, but I'll, for the sake of clarity, leave the head and shoulders in place. Look at some of these downside targets. They are, of course, the first major one down is the 42K region that we have tested, and I expect we'll retest on the way down, what I'm calling on our way down the mountain the plateau. And just below the plateau is the base camp at 39,000 approximately, 39.7 thousand as I recall. From the previous video, we discussed the three rising valleys, these three rising valleys here that took us up to 109,000. And we also mentioned at that time that an earlier three rising valleys pattern that took all three bull runs as a whole into consideration had as its final target this 39,000 region here. So this was the measured move from all three bull markets together, the $20,000 pump. And this, as I mentioned, was sort of a blow-off top or a throw-over, if that terminology makes sense, which, considering over a decade of price action, a 6-month throw-over is not too extreme. Anyway, on the way down from this structural peak here, we have the plateau, we have the base camp at $39,000 or so, which was the peak of the three rising valleys. Continuing down, we have the parking lot at $28,000 here. We've seen this number a few times. First, when we broke through it on the way up, this anchor point here, the swing high of the Andrews Pitchfork. When we broke through it, we saw that price. We saw it again when we retested it after this head and shoulders and formed this downtrend that we are honestly currently in. So we've seen that price before, and as always, it's easier to predict the prices on the way down than the way up. So this comes as no surprise. The next one on the way down is approximately $20,000, which is where the three valleys reach their pattern's conclusion at the 2017 bull market peak, and that's where the 20,000 is. This is the additional 20,000 afterwards, approximately. That's the measured move and the throw over. As we go lower than that, we've got this 2019 peak that is also the anchor of this sloped support line here, and that is at approximately $14,000. We also have a capitulation target that's anchored to the V-shaped recovery that begins and ends this COVID crash. So that is the lowest we can go, and it would not surprise me if we do test this low. My thinking is that if we test this low and do not bounce off of this median line here, which is a possibility, by the way, if we do not bounce out of here and stay inside of this larger trend, we could limp along up this way, but if we don't, if we fall below there and we hit 20,000, there's going to be so many people piling in to buy Bitcoin expecting a big bounce that the market is going to punish them. And that is my major thesis for 2022 as a whole, in all markets and in all areas of cultural life, is it's going to be a year of backlash, and that those who've been living high on the hog are going to have a reversal in their fortune. We've already seen it in the news cycles. I don't need to go into specifics for any of that. And to put it in financial terms, the market is going to take back what it has given. So something to consider. Don't make any investment decisions based on those few sentences, but instead do stay tuned to our channel here as we look at some of the parallel markets and look for indicators as leading indicators, if we can find any, of whether or not the cryptocurrency market as a whole is going to follow this path. If it does, it's going to happen soon, sooner than later. But to continue the thesis, if we do break through here, all the people who buy in this area are going to be severely disappointed, expecting that bounce. As a rule, markets are going to follow the path of maximum pain, and the path of maximum pain does take us below $20,000, and it will last a while. If we go down there, the people who buy here, they're still going to want to hold on for a while, and they have to be flushed out, and that's going to be a very, very painful process that's going to take more than a few months. So what does that path of maximum pain look like, and how do we get down to this capitulation target? Well, I'm glad you asked. This is very, very speculative. And let me say that just because I think we could come down here doesn't mean that there's not money to be made. There's a lot of swing trades to be made on the way down. And without getting into specific price targets, I just want to outline what I think is the path of maximum pain, maximum suffering, because that is the path that the market, I believe, will take. And it starts to look like this. We begin here, we hit the bottom of the fork, we retest the median line, and come down to the golden pocket again, retest the median line, some kind of an S-curve like this, and it's going to rattle people, but we're not going to retest. We'll get back over 20K very likely, but just enough to be below this retest here. Even if we break above here, we will still be below here. There'll be a fake out, and we will continue down, back to retest, and finally hit this grind here at the 2019 peak, which is also really the confirmation of the 2020 breakout. And from there, it just gets worse. I think we could actually finally reach our capitulation target and break out of this descending channel here, this descending trend, way out here into the future. So that's a very, very unpleasant looking prospect, to say the least. But that's kind of what I think it could look like. And if I were to zoom out of that just one more time for the long-term view of that price action, I think that it will ultimately look something like that. Essentially, we could make all of that happen. So we would be looking at that. That is my long-range projection of what I think could happen. So that takes us all the way out to the summer of 2025 with a full capitulation sometime through the summer of 2023. This is a very bold prediction here, and this is, like I said, nothing for you to make any major financial decisions on. This is just how I see the path of maximum pain and flushing out all of the weak hands through here. If price breaks below this area and falls out of this structure and follows this down, then it's going to follow it all the way down. And that's what such an action would look like. There'll be some variation in here. This may not be precisely what happens, but something akin to it would not surprise me. So you can bookmark this and check it in a few years' time and see how it plays out. But in the short term, which is what I'm really going to be concentrating my future videos on, what's going to happen, where are the swing trades along the way. And as I said, we also have to watch some of the other markets to see how they perform. Let's zoom into this here a little more closely as we conclude these thoughts for the day. Look at this here. So that's, as I said, some of sense of what is the path of maximum pain, what we can expect from the Bitcoin price action. Let's clear some of this just to make it nice and clear. All right, that I think makes some of it. We'll put this back like so. That is the shape of the market I think we're in. That's the path I think we'll follow. And so I hope you stay tuned as we look at some of the swing trades here that can be made, and we'll look at what is the future potential for an altcoin season. Is that going to happen? If the Bitcoin price gets dragged down, will altcoins go with it, or will they have a brief blow off top of their own? We'll be watching that very closely here, and I hope you will give this a thumbs up and share it with your friends and colleagues and anyone else you know that's interested in this sort of information. If you find it useful, please give it a like, subscribe, and as always, I welcome any questions about this and similar matters. So with that, I wish you a fine weekend, and as always, be liquid.